Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have a Bitcoin/cryptocurrency market update video for November the 30th. Of course, the monthly close is going to be taking place in about 30 minutes, so I figured it would be a good time to do this video. Before I jump into the content, please do me a huge favor, hit that thumbs up button, and make sure to subscribe to the channel if you haven't already. Don't forget to check the description. There's a link down there where you can join Patreon and help support the channel for just $7 a month. That will also give you access to more frequent updates and trade tutorials. So the first chart I want to take a look at is going to be this Bitcoin chart. This is Bitcoin versus the QQQ, which of course is an ETF for the NASDAQ. And one of the things that I see in this market right now is a lot of people think, well, James had this idea that this was euphoria and that this was complacency and that this was going to go down from here. And it looks like that idea has been invalidated. I don't know that it necessarily has. When I look at Bitcoin versus other assets, it still looks very much like we're in complacency right now. This looks like euphoria. This looks like the first dip after euphoria. And this looks like complacency to me. So that concerns me. We don't know for a fact that's what it is, but this is a chart that does not get traded. This is a chart that very few people ever look at. It's a custom chart, meaning it's not in TradingView, it's not in software. You have to actually go in and type Bitcoin USD divided by QQQ. But if you look, traded or not, it follows very standard technical analysis. There's the dip back in January of 2021. Of course, that level acted as support through here, and then the pump occurred. Not only that, if we put Fibonacci levels in here, for those of you that have been watching my channel for years now, you know that I'm a big fan of looking for longs when an asset retraces to the 61.8 and looking for shorts when it retraces to the 61.8 in a downtrend. So if we take a look at this, looky here, 61.8, perfect kiss of that. And a few years ago, I talked about, what I looked for is structure when something tagged the 61.8, more specifically a double bottom, which is exactly what Bitcoin did. It threw in a low here, tested that low here, and then up it went. So that was great. It was an easy place for people to get long based off of this chart. But if we zoom out a bit and take a look from the 2017 high to the 2018 low, what we're going to find is this top back here in March of 2021 actually pinged the 1.618 extension, which is often a place of resistance, and it could very well mark the top in this market cycle versus the US 100, or in this case the QQQ. All right, they're fairly interchangeable. We can make this the US 100, which is the futures, and we're going to have almost the exact same chart right up to the 1.618. So the reason that I care about this chart is because most experts agree right now that the stock market itself is overvalued, that it's in a horrific bubble, and that things will eventually come undone. Some people are calling for smaller pullbacks, 10 to 20% corrections. Other people are calling for horrific corrections. One of the guys, Jeremy, I can't remember his last name now, but he's an investing legend, trading legend, whatever you want to call it. I've been trading for 40 or 50 years, called the 2008 financial crisis, called the 1987 bubble. I believe he called the dot-com bubble. But he talked about how he thinks this will be the worst crash in U.S. stock market history. I don't know. I have no idea. I can't predict the future, and I haven't been trading 40 years, so I'm not going to try. I don't want to be complacent when I know things are overvalued. It definitely looks like something is going to come undone at some point. And if the stock market comes undone, we have seen in the past that Bitcoin overreacts to stock market corrections. If the stock market corrects 30%, Bitcoin will often correct 50 or 60%. So if the stock market were to correct 50%, which is what some people are calling for, Bitcoin very well may correct 80 to 90%, which, by the way, is what it normally corrects in a bear market, 80 to 90%. I think the worst correction in Bitcoin history was about 94%. So if we get a 90% correction from $69,000, you have to stop and think, where is that going to put Bitcoin at? Well, if this was the top, and again, I don't know if it is. I'm going to show you some other charts in just a second that show that it may be possible that this is distribution, but will still go higher yet. If we take a look at the top here at 69,000 and we pull this down about 90%, that's going to put Bitcoin down around $6,500, which it's gonna be right down around that level there, which never got retested. Now this isn't doom and gloom. I'm not saying this is gonna happen next week. I'm saying like bigger picture stuff. I've been taking money off the table again, right? Cashing out some of my spot, some of the spot that I haven't cashed out. I've started to hedge, and not because I can call the top and know, okay, 69,000 was for sure the top, but because if we do crash, I want to have at least paid myself something on this pump. I don't want to sit and ride this back down 80 or 90%. If it continues going up and it hits 100,000 or 150,000 or 250,000, that's perfectly fine, and that's great too, because I'm still holding some crypto, right? I always try to hedge my bets the best I can. But right now, this is looking pretty darn sketchy, okay? If we take a look at this monthly USD chart, we obviously have a higher high here and a lower high here, but that's not the only thing we have. We actually have this candle here with this red candle closing red. This is going to be confirmed bearish divergence for me. We have our high in 2017, our higher high in 2021. We have a high on RSI with a lower high on RSI. And then we have a second higher high on price while making a second lower high on RSI. Now that's double bearish divergence on a monthly chart. It's a big warning sign. Again, it doesn't say the market's going to collapse tomorrow. It says that overall the market is showing weakness, and I want to be aware of that. Also, another chart that we can take a look at. We can take a look at the junk bonds versus government bonds. So if we take a look at this, we'll put it on a monthly chart here. This is an indication of when big money is taking risks. When the junk bonds are outperforming the government bonds, that means that there's a risk on appetite in the markets. When junk bonds are underperforming versus government bonds, it means that people are moving to safer investments. We had this downtrend here that ultimately led to the financial collapse in 2007, 2008. Rebounded from there, continued its downtrend, had another strong downtrend here, and of course the quote-unquote COVID crash, which again, it's an excuse. That's what media outlets do. They make excuses for markets that were already weak in the first place. We see these signs showing up months and sometimes years in advance, and then it's like, oh, okay, well, this happened because of COVID, or this happened because of a housing bubble, or this happened because of this. When in reality, the markets were already weak. It's just the catalyst that kind of sparked everything. It's like having your house filled with natural gas. Yes, there has to be a match or some kind of spark to ignite it, but the natural gas was sitting there waiting to explode the entire time. So that's kind of what's happening right now in markets. They've got this new variant out of COVID, which from what I've read, and I'm not a medical expert, from what I've read though, the doctors that discovered it in South Africa are saying it's not that bad, that the symptoms tend to be mild. They're not seeing a lot of hospitalizations from it, but the media is all over it with their fear mongering. Oh, this is the new variant. It's going to be vaccine resistant and yada, yada, yada. And of course, they're saying that markets are reacting to that news. I don't know whether they are or not, right? I don't know. I don't particularly care. All I care about is the charts. This is definitely showing weakness. This monthly chart having double bearish divergence, definitely a sign of weakness. When measuring Bitcoin versus the NASDAQ, which by the way, the reason I measure it versus the NASDAQ is because I consider Bitcoin just another growth asset, a tech stock, if you will. If we measure Bitcoin versus money stock, what we're going to see is Bitcoin never broke its all-time high. In fact, it's been getting stuck right around the same level of resistance ever since 2019. If we draw from the top here to the bottom here, we'll find out that it pegged at 61.8 and then collapsed. If we draw it from the very top to the very bottom in 2020, we can see that again, it's getting stuck just under that 61.8. If we draw a very cliche area of resistance across this chart, we'll find that we have failed to take out the highest monthly close. If we draw a supply box using this wick as our supply zone and draw this over, we're going to find out that this failed back in April of 2021, pulled back and then gave it another shot, and right now it's sitting inside the supply zone. Now it hasn't collapsed, okay? This is not necessarily bearish, but it's more of a neutral type of chart. It could go either way. It could absolutely go either way. If this was to clear this zone of supply through here, Bitcoin may go absolutely bonkers to the upside. But if it can't clear this zone and starts to move back down, that's a triple top throughout this zone here, and that's not great. Again, the beautiful thing about charts, they work whether people trade them or not. I doubt very few people are looking at Bitcoin versus money supply. But if we look at the bottom in May of 2020, and by the way, I know you might be saying, James, Bitcoin bottomed in March of 2020. Not versus money supply, it didn't. right? This is when they printed all that money, and that's what sent those markets skyrocketing back up. If they hadn't printed that money, it's very likely the US dollar chart would have looked exactly like this. Would have eventually taken out the 2018 lows, but we didn't. It doesn't matter. Moved back up when it had its pullback, the 50-60% correction back in the summer of 2021. Again, right back down to the 61.8, right back down to this old level of support. So whether you're looking at these charts or not, they work. So I apologize. I spent much longer in this than what I intended to. I only wanted to spend 2 or 3 minutes on it. I realize now I've been talking for 10 minutes. So I'm just going to kind of wrap up the macro kind of viewpoints there. Again, this doesn't predict what's going to happen today or tomorrow. It's the bigger time frame that I'm looking at. As far as the current price action on Bitcoin goes, there's a few things I'm watching. The 3-day chart on Bitcoin is of interest to me. It looks like Bitcoin is in a rising wedge, which is a bearish reversal pattern, but it's not confirmed yet. It has to break out of the wedge before it really, means a whole lot. It's just something I'm watching. The RSI did come back down inside the quote-unquote bear market box. It tagged the same level of support that it bounced off of in September, and right now it's retesting the top of the box, which would of course be resistance, and retesting this horizontal resistance as well. So I want to keep a close eye on this. I don't know which way it's going. This looks eerily similar to Wyckoff logic. Now, if you're a bull, you might like what I'm about to say. If you're a bear, you might also like what I'm about to say. If this is Wyckoff playing out, if this is distribution, what I would assume is that this is probably a UTAD, which stands for an upthrust. And I know that bulls might say, well, why would I like this? Distribution is a bearish thing. It is, but if this is a UTAD, if this was our buying climax back here, and this was, our strength test, and this was our SOW or sign of weakness, and this is our UTAD, well, take a look at what a UTAD actually looks like. There's 2 different schematics over on stockcharts.com. Schematic number 2 says you get the upthrust, you get the pullback, and then you get another test of supply before the actual markdown phase. So that wouldn't be great if you're a bull. But it could be that this is also schematic number 1, where we're actually in the upthrust right now, coming back down out of it. We may have a bit further to move down for a retest down near the old lows back here in the summer. And if so, it's completely possible that we get the upthrust after distribution, which is that last final pump before the market actually shifts direction and goes into markdown. This final pump acts as a bull trap. It gets retail to FOMO into positions up at the all-time highs where big money is unloading. On this chart, it looks like it's just barely above this last upthrust. That could be the case. Maybe 69,000 is our current high. Maybe it goes to 80,000. But this could also go completely parabolic, which is often what happens in a blowout top. And this might be what takes Bitcoin to $100,000 or $150,000. I have trouble seeing it get much higher than 150,000. That would be more than double where it's at now. But it is completely possible. If you look back in time at the last couple of months of 2017, that's when all those major gains on Bitcoin happened. This candle here was the November 27th candle. And from November 27th until the top, which was only about a month, it pumped 111%. So it's completely possible that we do get a 100% pump where this doubles in price before the market completely pukes back down. I'm not going to write that off. And I think it's extremely dangerous to be blindly shorting the market. For some people, I saw this last year in my Facebook group, they would be shorting and they would say, I'm not going to have a stop because I know it's going to go down. Well, that's dumb. It's dumb to short a market without stop losses, just like it's dumb to long a market without stop losses. Either your entire position is your stop. In the case of a long, you can't lose more than you invest. So there's literally a way to go about trading where you only put in what you're willing to lose. But in a short, you have unlimited risk. If you short something at 57,000 and it goes nuts and some crazy event happens that sends Bitcoin to $1 million, well, you're down $950,000 per Bitcoin, right? Obviously, most people would be liquidated before then, but you could literally be wiped out financially if you open a naked short without a stop loss and you have too much money on the exchanges. So just keep that in mind. And the risk reward is just not great on positional shorts, guys. So while I'm talking about these levels, while I'm talking about these bearish scenarios that could potentially play out, it doesn't mean there's a lot of reason to go out and try to short Bitcoin into the ground. The best case scenario, if you short a Bitcoin at $57,000 and it went to zero, you're going to double your money. Now, obviously leverage can change that, but listen, you're basically doubling your money. On the flip side, when you long something at say $4,000 back here, look, those people have 15x'd their money. So there's a reason to go long. You have limited risk. If you buy one Bitcoin at $4,000, the most you can lose is $4,000, but you can make unlimited returns. If you short something at 57 grand and it goes to zero, the most you can make is 57 grand, but you could lose unlimited amounts of money. So I'm not jumping for joy. I don't want the thing to crash. I just think that the market's weak. I also think that even a lot of bulls in cryptocurrency will readily admit that they think this thing runs in 4-year cycles. And of course, we're coming to the end of a 4-year period. So if Bitcoin, if history repeats itself, which they say history doesn't repeat, but it often rhymes, well, we would be coming to the end of the market cycle on a time basis as well. So could this time be different? It could. I mean, things could always be different. There's obviously differences in the market. There's a lot more institutional money involved. There's a lot bigger money involved. We had a total market cap tiptoe up to around $3 trillion recently. This is a much bigger thing than it was in 2017. But I will tell you this, for the people telling you that Bitcoin cannot crash, it's too big now. There were people saying the exact same thing in 2017. I remember in 2017 being very new. I'd only been trading about 7 months, and I had done a video on December 7th. Yeah, as in that December 7th. I had done a video saying that I thought the market was probably topped, but I'd only been trading about 7 months. I got a lot of hate for the video. I got made fun of and trolled for the video, and I felt like an idiot, and I thought, what the hell do I know? Why did I do this? Why did I do a video on this? And I deleted it. And then guess what? I was right. It was the top. We had a little sneak above it a couple days later, about a week later, and then the market completely rolled over. But I didn't have the confidence to stick to my own call, because one of the things that kept getting thrown in my face was I was saying, look, in 2013 this happened and the market crashed 84%, and people were saying, oh, no, that was just because of Mt. Gox. That's never going to happen again. That was a fluke thing. It's never going to happen. And honest to God, I had no idea that Bitcoin had crashed before 2013. None. I didn't know. I thought that was the only time Bitcoin had ever crashed. So when people came to me and said that it was a Mt. Gox thing and that's the only reason it happened, I believed them. And I held my Bitcoin down, down, down. Not only did I hold my Bitcoin up here, I remember buying Bitcoin when it fell down under $11,000, thinking what a genius I was, especially when it rebounded right back to $17,000. But I held this Bitcoin all the way to 2019 when I finally sold it up around 13 grand, right? For a tiny little profit, about a 20-30% profit. But I could have taken the same money, which by the way was a lot of money, that I put in back here, put it in over here, and made myself a whole lot more money. Okay, so I don't have a crystal ball, and I know that I've been wrong in the past on this. I've felt like we've topped out a couple of times, and I've been wrong about it. I felt like 40K was probably going to be a top. It obviously wasn't. It moved higher. But you know what? I was right about this one. I was spot on. I said this was Wyckoff. I said this was our UTAD right here before it ever started coming back down. I posted this on social media. Right here was the last test of supply. Right here. And then down she went. 50% down she went. So if this was our sign of weakness back here, and this was our upthrust, and this was our upthrust after distribution, I kind of view us as being right about here at this point. I think we still got to drop here. We'll either get an upthrust after distribution, or we'll get some kind of retest of supply and then break down. And of course, we're talking on a larger time frame. On the smaller time frames, the thing that really gets me is, you see a lot of people trying to use all these fancy indicators and all this fancy talk and double talk and triple talk. And the reality is just draw some lines, guys. That's all you need to do. The stuff is not rocket science, and it doesn't need to be complicated. Yeah, you can get pretty advanced. You can use stuff like Fibonacci levels, and you can use Elliott waves, and you can use things like Wyckoff logic, and you can use all these things. And I think it does help. I think it increases your chances of getting the big moves right. But you can get a pretty good idea of what a market's doing just drawing some lines. For example, this is a 6-hour trend line. These are 6-hour candles. This was their top back in November at 69,000. This was the next swing high. Draw a line, right? Got tested right here, false break, fell back under it. Got tested again, big old wick, supply left behind, close back under. This is a sign to get short right here. I'm not saying you should short it. I'm just saying that technically speaking, this would be a sign, one reason that you might want to look for short positions on Bitcoin. And maybe it just goes back down and retests this range back here. Who knows? Who knows, right? But it's just a line. It's really not that complicated. If you draw a horizontal resistance line, look at that. Stop dead at the line. And by the way, I'm not cherry picking this. This was all posted. A lot of this I posted in my free Facebook group, and a lot of this I posted on Discord. Okay? This is not new stuff that I'm suddenly going back and going, oh, well, in hindsight, look at this and look at that. This was shared in my Patreon starting back on November 26th. I talked about this. We were testing at that time. We were sitting right at the bottom of this demand zone, sitting right at the bottom of this channel. And I had mentioned, hey, we're testing demand right now. Demand got bought up. Price went back to the top of the channel. Hey, we're testing the top of the channel right now. You might want to short it. I mean, maybe not. Maybe so. Who knows? Right? Boom. Back down to the top of the demand box. The market's just moving between very basic levels. This is not, a mystery, if you will. But again, when you talk about the market, one of the things that you want to keep an eye on is volume. Well, look at the volume. What's happening right now? What was one of the reasons that I thought this was distribution back here? Well, great big selling volume. Great big selling volume. Great big selling volume, right? You see how there's a lot more selling going on than buying? And then down it went. Well, what do we have again? What are we seeing? We had some good buying back here, but now it's big sell volume, roughly equal, bigger sell volume, bigger sell volume, bigger sell volume, bigger sell volume. You see what I'm saying? It should be bigger green volume candles if this is not distribution, if this is accumulation or reaccumulation. You'd expect more buying than selling. So it's just a warning sign. That's all it is. Overall, if we take a look at the weekly chart, we are coming down fairly close to that 19-week moving average again. That's worth keeping an eye on. I remember last time we tested it, we got that brilliant move off of it from around 41,000 all the way up to 69,000. But we are back underneath this old level of resistance. So this could very well be a false break. A lot of times in trading, when markets pop outside of a range like that and then tuck right back inside of it, it's often a sign that the market wants to go the other direction. So keep that in mind. And yeah, overall, it's just, markets are markets. We just see a lot of weakness across the board right now. And, it very well could just be a case of the markets have moved too far, too fast, and they just need to correct. So we will see. This is not about, telling you to get long or short on Bitcoin. It's just giving you an idea of what I'm watching personally. So I'm going to wrap today's video up with a really positive story. So I had a student who recently hit me up on Discord, and they weren't sure how to close a position on FTX. Essentially what had happened was they joined one of my spread trading courses in the earlier part of 2020. They opened a long position on BNB Perp, and they opened a short position on BNB futures. I think it was the June 2020 futures. And they were just testing the system out. They were getting their feet wet to try to figure out how things worked. So they took out a 100x leverage position. They took out a 100x leverage long, and they took out a 100x leverage short on the other side. So it was completely hedged. And then they got busy with life and kind of got distracted from trading. And they went and logged back in last week, and come to find out that short position, of course, that future expired, but the long perp never expired. It sat there running up, 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 up. And so this trade was a roughly $5.78 trade with 100x. And they ended up cashing it out last week for $376,704.37%. It cashed out just over $20,000 on a $5 trade. And yes, obviously there was a lot of luck involved. It wasn't planned. Their average buy price was $16.32. Their average sell price was $6.31. But it did make me super happy. And again, I just want to share it as an example of what can happen if you truly learn to trade. Now, again, this was luck. But if you truly learn to trade and you're prepared for the next bull market, there will be opportunities like this all over again. Now, with all that being said, I'm going to go ahead and wrap the video up here. I hope you enjoyed it. I hope you got a lot out of it. Please do me a favor and hit the thumbs up button now if you haven't already. Make sure you subscribe to the channel. Make sure to leave me a comment. And make sure you join the Patreon. It's just $7 a month. And I'm going to be deliberately focusing more of my energy and time on people who are supporting me in the future. That goes for my paying Discord members. It also goes for my paying Patreon members. And I'm going to be scaling back the amount of free content that I do. Please remember, I am just some guy sitting in a spare bedroom, which means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, or the Forex markets. All right, this is James with Crypto Common Sense reminding you all, please trade safe.